Hey guys, welcome to the second video of this week. In this week, we're going to be talking about a special stock. This stock has dropped about 65% from its all-time highs, and it's also got a cousin who got dinged pretty hard recently, dropping the same amount. And that stock I talked about earlier in this year, I think it was maybe a month ago, and that stock was Lightspeed. Today we're talking about its cousin, Nuvi, which got hit by a short report by Spruce Capital. The same short seller who also wrote a report on Lightspeed. And you'll find out later that Spruce Capital has so much to gain for the price declining on Nuvi and on Lightspeed. However, as prudent investors, we must look into if the facts are true and look at the hardcore numbers and the facts to see if this short report has anything to stand on. And obviously, you can probably guess the conclusion is no, but let me take you through my 7-point analysis with a bonus point at the end on why I think Nuvi could be an interesting play for your portfolio. Now, before I move on, I've got to mention today's sponsor, which is Cantech Letter. This is a website or a news site that's focused on Canadian stocks, and what I love about them is that they write about small cap stocks, which you don't really get from other news sites. They write about Well Health Technologies, CloudMD, Lightspeed, Nuvi, you name it. I love this site because they give level-headed analysis and they always consult the analysts for some factual evidence of why they think a stock could be a good buy or a good sell. So if you want to check out their website, I've got a link down below in the description, and you can sign up today for the newsletter. All this is completely free, no strings attached. Now let's jump over to the other screen and check out what's going on with Nuvi today. So there are 7 points that I want to make in defense of Nuvi stock and why I think there could be value in buying the stock right now. So the first point we have is looking at Spruce Capital and what is their incentive in distributing this short report. And we don't have to scroll very far to find that out because on page number 2, on their full legal disclaimers, they state that Spruce Capital, possibly along with or through our members, partners, affiliates, employees, and or consultants, along with our subscribers and clients, has a short position in all stocks and our long-short combinations of puts and calls on the stock covered herein, without limitation, Nuvi Corp, and therefore stand to realize significant gains in the event that the price declines. Now going over to Nuvi stock, we can see that it's fallen off a cliff. It's dropped from 121.73 on December 7th, and the date that the short report was released, the stock dropped as far as $73.12 over here. In a percentage point gain or percentage point loss, the percentage point loss in one single day was 40.42%, just because of this short report. Now I could go through the entire short report with you guys, but I think you'll fall asleep because honestly looking at this, it's a wall of text and no one wants to read this. If anyone who sold the stock read this entire short report, they would have definitely sold at the bottoms and missed out on the huge plunge. So honestly, I don't think anyone really read the short report. Rather, people saw the headlines and sold the stock off. There's a lot of sort of shady comments and I think half-truths that are displayed throughout the short report. And they're trying to use things like the CEO once had a traffic incident with the police to discount the business. I mean, the guy was probably 20 years old and maybe was at a party and got drunk and got a DUI. But this is way before he became the CEO. So a lot of the BS that they have in the short report, I think it's just, you can dismiss it. But in case you want to read the short report for yourself, I'll link that in the description down below. The second point we're going to look at here is how much Nuvi has dropped from its all-time highs. It reached an all-time high of $175.04 on September 16th this year, and it's dropped 62.15% from there. Now, the fact that the company is on a 60% decline when people are willing to buy the company up at 175, well, I think that should turn our heads and be like, is there any value in Nuvi? I mean, they are a company that is growing very rapidly right now. And in fact, they are a company that's growing rapidly and have a positive P/E ratio. So this is another point that I want to bring up, is that Nuvi is a profitable company. And if we go over to their cash flow statements, they also have positive free cash flow. And they've been having that for the past 3 years or 4 years. Every single year, the cash in the bank is increasing versus the cash going out. And I think that this is probably the easiest way that we can understand a business. For example, if you're starting a lemonade stand, right? You want to be able to figure out how much cash is going out to buy the products to make the lemonade, and how much cash are you recuperating when you sell your lemonade. You really don't care about the net income because net income has some things that are non-cash related that are included inside of that calculation. For example, let's say you paid your employee in stock options. I mean, that's not cash going out of your bank to your employees. You're just giving them a chunk of your company. Now, looking at the income statements, where I said earlier they have a positive P/E ratio, every single quarter in the past 3 quarters, they've reported a positive basic earnings per share. However, prior to this, in 2020, 2019, and 2018, they were running a negative net income. So meaning 2021 was the first year that they've had positive net income. Now looking at this from a business standpoint, just at the numbers, first of all, they've been positive cash flow for the past 3 or 4 years. And now they've transformed the company from a negative net income company to a positive net income company. So it looks like the business is kind of on track to becoming profitable and self-sustainable. And what this means for investors is that the company will no longer dilute shareholders, or at least they will no longer have to dilute shareholders in order to keep running the company. It's possible that they could continue to sell shares in the future. However, they better have a good reason for doing so. And typically, people will do so in order to fuel growth and grow at a more exponential rate. Now, point number 4 here, I've got up on the screen some analyst estimates. So we can see that Scotiabank in August this past year raised their price target from 123 to 158. And all these analysts, none of them have decided to downgrade their estimates, because otherwise we would see that on the screen right here. So they're still holding this 158 price target. CIBC has a price target of 155, National Bank at 150, Credit Suisse Group at 145, and Citigroup, all the way back in July this year, has a price target of $84 per share. And these are all price target raises. None of these banks or analysts have dropped their price target. So despite the short seller criticism, analysts largely remain bullish on Nuvi. Among the 14 tracked by Bloomberg, 12 analysts, including one who upgraded on Wednesday, says that Nuvi is a buy, while the other 2 have hold recommendations. The consensus price target on Nuvi's US listed shares is $130.79 USD, implying a 115% potential upside from Thursday's closing price. There are also 3 specific analysts that give their own personal opinion on the short report. You can pause the video here, or I'll link it down in the description below. Point number 5 is the most famous short seller who shorted Shopify back in 2016, 2017 or so, and lost a butt ton of money. He's actually coming out and saying that Nuvi is way oversold. The company grew 92% in 2021. Spruce Report says word fraud 48 times, yet no proof of fraud. Easy to find customer complaints on any company. Who cares if the CEO did not graduate college or has a driving record? Play the ball, not the man. PwC auditor. They followed up in another tweet saying, Nuvi, we are not defending omitting information from bio or management. We are suggesting through experience that stock is oversold on this report. We bet on PwC no fraud. And yes, growth 31% next year. Strong work by Spruce, but stock has overreacted. We expect analysts and company to defend. So I think that Citron Research has learned the lesson by shorting certain stocks, and they believe that Nuvi is one of these stocks that you shouldn't short. And because they've been in the shorting business for very long and know how to get burned, then I think that Nuvi investors can build a little bit of confidence that Citron, a short seller, is backing Nuvi. Point number 6 that I want to make here, I actually did a video on Nuvi, I think a year or 2 ago when they IPO'd. And when I looked at their customer base over on this slide right here, I honestly didn't know like any of these companies that they sell to. However, the business has transformed and they've got a lot bigger customers that are well known around the world. For example, we've got Riot Games over here, we've got Wix, we've got Razer, Topgolf, Steam, we've also got FreshBooks, Geico, all these customers that they have. These are brands that now I've heard of. Now, if we look at the companies that they had a year or 2 ago, tell me down below in the comments, do you recognize any of these brands here? I honestly can say that I don't know any of these brands, which was concerning to me back then. However, I think re-looking at the customers that they have and how they diversified out into larger companies that I know, then I have a bit more confidence in the company and their business model. Another thing is Nuvi is also focused on online gaming and online gambling. I think this space is just getting started. A lot of the criminal activity that was reported about Nuvi in that short report actually referenced their ties to all these gambling companies, because online gambling was not legal like 10 years ago. So of course their customers are going to be in trouble with the law. So it only makes sense that as things are getting deregulated right now, Nuvi stands to gain from that. So if you're bullish on the online gambling space and don't want to bet on just one person, then Nuvi might be an interesting stock for you to look into. The last point that I want to make, actually, I've got a bonus point, so stay tuned for that. So the second last point is that to get an initial public offering on the TSX, there's a very stringent requirement for a company to go through. There's a lot of documentation, a lot of lawyers involved in it. So to be able to run a fraud business on the TSX, it's very difficult to do. Now, going back to when they actually IPO'd on the TSX, they IPO'd on September 23rd or around that time. And it was the TSX's largest tech IPO ever, raising $805 million in gross proceeds. Actually, just for fun, let's just go over the balance sheet and see what their financials look like. So looking at the total assets right now, the current assets sit at $942 million. If we look at the total liabilities, or current liabilities actually, it sits at $731 million. So they have more than enough total current assets to cover their current liabilities. So in my opinion, the company is not in any sort of financial trouble right now. And Nuvi IPO'd on the US stock exchange, so this is their, I guess, second IPO, on October 8th, 2021. So not only have they passed the Canadian stock exchange regulation, they've also passed the American one. And they're not on some sort of OTC market, they're on the NASDAQ. Now the bonus tip that I have for you guys here, and I bet nobody has talked about this, is that when you look at a company, I think you really want to understand their employees and how they feel about the company. And if we go to Glassdoor, we can see that they have 113 reviews. And if we look at the average score from the reviewers, these are insiders that work for the company. 70% recommend the company to a friend, so they recommend a friend to work for the company. However, 96% approve of the CEO. That's a pretty high CEO approval rating. I don't usually see that high of a rating on Glassdoor. Usually we're probably seeing something between 60 and 70%. For the very bad companies, maybe like 40 to 45 or even 50%. But the CEO getting an approval rate of 96% out of 113 reviews. It's not just 5 reviews. This is 113. That's quite impressive to me. So they've got a 4.2 star rating. Now, if we look at the most recent reviews, we've got a review on November 26th, 5-star review. October 5th, 4-star review. We've got September 1st, a 5-star review. We've got August 8th, a 5-star review. And then we've got May 18th, another 5-star review. And then we've got one here that's a 3-star review. But that was in April 2021. The only con was salary was not competitive. And I think as a worker, if your salary is not competitive, then I can understand why you gave it a 3-star. And the list goes on, but I would say on average, we're probably seeing a 4 to 5-star review on the first page. So to me, this is good news for Nuvi that their employees enjoy being at Nuvi and working there, and they approve of the CEO. So as I told you in my video earlier this week on Sunday, which I released, there's one stock that I'm looking to add to my portfolio, and I think I might take the plunge into Nuvi this week. So if you want to find out if I bought Nuvi this week in my video next Monday or next Sunday, then be sure to subscribe down below. Now, for those of you who are still scared about Spruce One Capital and are like, can Nuvi actually recover from the short report? Well, let's take a look at an example. We've got GFL here, which they decided to write a short report on August 18th. Now, if we go to Google and search up GFL, we can see that the stock has actually done quite well since that short report was created. In August, it was August 18th, I believe, when they wrote that short report. Yes, the stock had a small drop, definitely not as bad as Lightspeed. However, since then, the stock is up by about 64%. Now, we are in downtimes of the market and a lot of high-tech growth stocks are down. So Lightspeed is another example which hasn't fared so well. So Lightspeed has fallen from grace and they've dropped a total of 65%. But I think this is just the major sell-off of all high-growth tech stocks. A lot of people are just cashing out of these positions, and especially with a short report, this is not good news for tech stocks in the short term. But if you're a long-term investor, I personally think that Lightspeed and Nuvi will definitely recover sometime in the future. I've got a couple videos on the screen. If you're interested in those, you can check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.